Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. We'll see how the markets behave. For those of you new to the trading room this morning, welcome. I'm going to give you a real quick overview of what you're looking at here. This is the Diversified trading system. And it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Micro Scalper. This tool has been designed specifically to pick up scalp signals. Next to it, we have the Falcon Swing Trader, which is our swing trading tool. Bottom left is the Eagle Trend Trader. This tool has been designed to pick up trending signals. And then on the bottom right here, we have the latest addition to the DTS family. This is the Raptor, and the Raptor is actually a blend of the other three birds all incorporated into one chart. So it has elements of the hawk, the falcon, and the eagle. The charts I'm looking at here are the NASDAQ. I'm also following gold and crude oil, but I'll be happy to take a look at any chart which is of interest to you, so please don't be shy to ask. Let's take a look here at what's been going on in the overnight. So yesterday, a fairly quiet session, at least here on the Eagle. You can see the market was bouncing back and forth a little bit, and then toward the close, put in a little bit of a rally. Relatively quiet through the Asian session and the overnight. So it's not going to look like, well, no opening gap really to speak of. We are generating a red bar buy here off of the hard edge, which is one of our higher probability signals. You're going to see that all the signals develop the same way. When a signal first develops, we're going to get a warning dot. So you see we actually have a red warning dot here. When all the signal parameters have been met, we're going to get a triangle and a hash mark. So you can see right here, actually both signals developed on the same bar. So we got the warning dot, the triangle, and the hash mark, telling us that all the trade parameters have been met, and now it's time for us to decide whether or not to take the trade. Now you're going to also see that we don't take necessarily every single signal. We're looking for our high probability signals. So here on the Hawk Scalper, for instance, well, here, let's go back to yesterday because we don't have too much today yet. We'll be looking for things like this signal right here. This is what we refer to as a first micro-macro crossover signal. Essentially, it's when the micro line crosses the macro line, that's a thin one, over the thick one, and it's the first signal where everything comes into sync. So we've got green bars, green trend lines, green filter, and a green signal. And you can see that had pretty decent follow through. Another signal we're going to look for is something like this macro pullback signal right here. The macro pullback signal, again, everything stays in sync except the micro line. So that's how we identify the macro pullback signal. And then there will also be things like 4 arrow consolidations and red bar buys. But right now, the Hawk is giving us a pretty clear picture of the current market condition. You can see how broken up everything is, how we've got all these yellow bars through here. Yellow bars are very neutral. So we're not trading the market right now. All right, Dan is having some audio issues. Is everybody else hearing me? Can I just get a real quick audio test? Hello? Oh. Oh, okay. All right, thank you. Thank you. Everybody says that the sound is okay. So Oh, Randy says he's not picking it up. All right. I don't know. Maybe that will be a little bit better. Hold on. I'm just going to send Dan a quick note. All right. Okay. Well, I'm not sure. Sometimes I'm just doing a sound check here on the software, and it looks like everything is working correctly. But with this go-to webinar stuff. All right. Well, let's see. Can I dial up the audio any? No, I can't. Well, we're gonna have to tough it out, I guess. Okay, so we've just saw the market open. It's really not doing anything right now. I will show you some trades just so I can demonstrate how the system works. I'm also going to show you this tool right here on the right-hand side. This is called the Trade Manager. This is perhaps the single most important piece of software you can own, because it's going to control your risk exposure to keep you from blowing yourself up. Liv is asking, with the mean Renko bars, can you see where the bar opens and closes? Well, yes. These green bars here on the Hawk, they're going to open right here at the low and close at the high. These bars with the tail, and because the bar is green, I know that it opened here, made a low down here, and closed up here. So in that sense, they're very much like a traditional candlestick. Right? This red bar here, I can tell you it opened right here, came up, made a high, and closed down here. For those of you who are interested in trading the mean Renko bars, or simply like to trade a range style bar like a Renko or a range bar, you may also be interested in this little tool that you see shadowing the mean Renko bar. This is called the Logic Counter. I'm not sure why, but it's a tool that forecasts where the high and the low of the bar will be. So at the moment, you can see that we're generating a warning dot. This is going to be our first micro-macro crossover signal. And what I'll do is, pardon me, I'll take the signal so I can demo it for you. But the market's still a little bit sideways. So if you're looking for a quality signal, you might want to hold out a little bit longer. But using this logic counter, I know that my hash mark is going to print right here, because it's going to print one tick above the high of the signal bar, which is the current bar, which is forming. So now I can set up my trade parameters, I can set my stop loss, submit my order, and now I'm going to have an active order. Liv is asking regarding the mean Renko bars. So the open is always artificially at the midpoint of the previous bar. I'm not sure if it's an artificial representation, but then again, I'm not the programmer. You are correct that the open is midway of the prior bar, which is, I guess, why they call it the mean Renko bar. It's not because the bar is angry, but because it's working off of the mean, or I suppose they could have even called it the median Renko bar. If you would like more information about that, you can email Adam at indicatorwarehouse.com, and he will actually forward your questions to the programmer. So here we are now with the first micro macro cross signal. The reason I'm running my stop so deep is because, well, we've just broken out of this trading range, right? So I'm anticipating that perhaps the market is going to make a little bit of a pullback here to retest this zone, which is what we typically see when we break out of a channel style formation. And once we get that retest, then we'll get a more probable buy or a higher probability buy. But this signal does have a good win ratio to it, the first micro macro cross. For those of you who have been in the room before, you would probably have heard me say that it's one of those signals that I'll take almost without exception. But it's still early, so market's trying to feel its way around. Steve is asking, can we see the other questions? I'm sorry, Steve, I don't think that's an option with this particular software, which is unfortunate. I would like to be able to share the question panel with everyone in the room, but yeah, I'm sorry I can't. Okay, just 1 second here. I'm sorry about the audio problems, folks. There's nothing I can really do with that. You can try logging out and logging back in, but from my end, I've got the volume up as high as it will go, so I do apologize. So there was our first micro macro cross signal. You can see it rallied, hit our high probability profit target, took us out of that trade. So, you know, that's really the name of the game, isn't it? Get in, make some money, get out. While we were watching that, we also had a couple other signals print. Let's go here to the Raptor so I can show you this Geiger counter. The Geiger counter is one of these add-on tools. It will work on any chart, a time-based chart, or a Forex chart, a stock chart, whatever it is you're watching. You see this little buying spike that went through the market here, this histogram? If we were watching the Geiger counter while we were watching our first micro macro cross, we would have seen this dial pulled hard over to the green side here, and we would have seen the buyers just chewing through the orders, and that was the result. So we saw a big spike in the buying. Now sometimes that actually preludes a reversal where the buyers kind of fall into that bull trap, and then you see the market reverse against them. But in this particular instance, when the wheel moves hard over like that, that's usually a pretty good indication that we're going to see a little bit of a rally. Here on the Raptor, again, we're looking for our higher probability signals. One of our high probability signals is what we refer to as the double pullback. So the market moves into the cloud twice and then comes out of this cloud, and it produces, in this case, a buy signal. So there was one of our high probability Raptor signals. And you can see that it too had a decent amount of follow through to it. Okay, I just wanted to show you that on the Geiger counter before it went off of the histogram. So you can see buying volume, selling volume, very small compared to what that spike was just a few minutes ago. This is essentially a tape reader. It's one of the newer tools from Indicator Warehouse. Okay, let's see now here. A couple questions from Liv, and I think somebody was also asking about, oh, here we are. Bill is asking, can you use minute and tick bars? Yes, absolutely you can, Bill. And let me show you. It's going to look different. Here, we'll do it on the hawk. It doesn't really matter. Let's say you were watching a 3-minute chart. This is what it would look like on a 3-minute chart. So the signal still produces, the system will still produce signals. Here's your first micro macro cross lower. So a nice little move to the downside there. The problem is with the time-based chart, of course, sometimes these ranges get a little bit big. And it will also work the same for a tick chart. So if I say put a, well, we'll go with the default, the 150 tick. You can see it also produces signals. So here would be our first micro macro cross higher, and a nice little progression from that. Was working on a macro pullback here. Remember I told you the macro pullback is when that micro line goes out of sync, but everything else stays the same. But now that signal has been spoiled by the yellow bars. If you do get tick data though, I would very much recommend that you give these mean Renko bars a try. When Adam first came to me about them, I was reluctant because I was a 5-minute chart trader. That's all I traded. And I tell you the truth, after a couple of weeks of using these, I told Adam I probably wouldn't go back to a 5-minute chart. I really like how they show you who is in control of the market. Right? You can see very plainly where the support is at. You can see very plainly we've got buyers coming in down here. Oh, the buyers just got a little bit stronger right here. You can see very plainly where the sellers are drawing their line in the sand. The candlestick component of the mean Renko bars just makes them that much more powerful than a regular Renko bar or even a range style bar. I do know one thing about the mean Renko bars. The reason they were, or one of the reasons they were chosen for the DTS system, is that the way the bars formulate is very good for the indicators. So even if you're not trading DTS and you want to pick up the mean Renko bars, let's say you've developed your own system where you're using whatever, stochastics and MACD, the indicators will perform better using the mean Renko bars. Now, the programmer explained it to me once. I was only halfway paying attention, but the fact of the matter is the way the bars formulate like this, the indicator will also end up giving smoother results. All right, so there you go if you're interested in that particular bar style. And forgive me if I miss your question. Please don't hesitate to repost or say, hey, Eric, you missed my question. Bernie is asking on the Raptor at 755. Okay. Bernie says, it looks like on the Raptor, 755, is that a buy signal? What would say not to take that trade? Thanks. All right, so let's take a look here. 755. All right, well, I'm not sure exactly which signal you're referring to. Maybe you're looking at your own computer clock. No, because it's only 6:50. I was going to say maybe it was 6:55. Okay, well here, rather than focus exactly on that signal that you happen to have your eye on, let me give you an example here. We tend to only focus on our higher probability signals. So just as a for instance, I'm going to show you here real quick. This is the cheat sheet for the hawk. And now I'm showing you the hawk because, well, I haven't done one for the Raptor yet, but the principle is the same. And we do go over this every day in the trading room. So don't feel like, oh, Eric hasn't done one for the Raptor, I'm not going to know what to do. These are the signals. These are our high probability signals that we're going to focus on. So in the hawk, we're looking at first micro macro cross signals. We're looking for macro pullback signals, 4-arrow consolidations. Here's a post 4-arrow consolidation and coincidentally also a macro pullback. A red bar buy or a green bar sell. So these are the signals we're focusing on. Notice, we're printing a signal right here, but we're not interested in it. Why? Well, because it doesn't meet any of these parameters. It's a yellow bar signal. Not interested. We're not taking any of these signals through here. Why? Because it doesn't meet any of our high probability parameters. So the Raptor is very similar in that respect. I'm not so interested in this signal right here, in this buy signal here, or in this sell signal here. Why? Because it doesn't meet any of our high probability parameters. I am interested in this signal right here because that does meet our high probability parameter. This is, as I mentioned, the double pullback where the market has a tendency to come spend some time in the cloud, usually makes 2 pullbacks into the hard edge, and then comes out and produces a signal. So this is a signal that we would be waiting for. Once that signal printed, well, then that would be a signal we would take. These signals up here, not so interested. Is it a viable signal? Well, all the trade parameters are there. So yes, it is a viable signal. Is it a high probability signal? No. So if, let's say you were looking, let's say you were looking at this signal right here and you're debating, should I take that? Well, yes, you can. You can take it right on the hash mark if you want. So let's say you choose to put your entry here. And now the question is, well, where do I put my stop? Because I know this isn't one of the higher probability signals. Well, actually, you should put your stop way down here just to give yourself some staying power in case the market decides to make a swing lower. Because it's not a high probability signal, we really don't know how far it's going to swing. Right? So there you got filled. Now the market's making a little bit of a move against you. We could anticipate some support here, but what typically happens is we'll see the market drift back to the hard edge and then produce a signal. So what we do is we would probably forego that signal because it's not one of our higher probability signals, and then let the market drift back to the hard edge and produce a signal. That would be one of our higher probability signals. So short answer, we look for peculiar setups. Here is what we call a soft edge buy, even though it happened on the hard edge. But there's certain things that make this a higher probability signal. First, we've had our test of the extreme, and then the market comes back and produces a signal, which is a high probability buy signal for us. This signal here I actually would not have taken because even though it's a soft edge sell, just the exact opposite of this one right here, it didn't have the structure going into the trade. We didn't have that test of the extreme, the failure, which is what I would need to complete that signal. All right, so this is actually a signal that we would not have taken. Even though it worked out, it wasn't one of our high probability signals. A common misconception about trading is that people think they need to trade a lot to make money. They got that factory mentality where, if I can just make more widgets, I'll make more money. No, that's not the way trading works. You'll be more successful in trading if you limit your trades and correctly capitalize yourself on the signal. So in other words, if you get a high probability signal, go in with as many contracts as you can afford. If you can only afford one, okay, you can only afford one. But if you can afford to take 2 or 3 or 4 contracts, then that's what you do, because that's how you're going to make money. That's how you're going to maximize your winners. You're not going to maximize your winners by trying to find more winning trades. You're going to maximize your winners by waiting for your high probability signal. And then once you get your high probability signal, go in with as many contracts as you can afford. See, what most people will do, and it's hard for me to demonstrate this sometimes because the DTS system is very good at picking up immediate market momentum. But sometimes you're going to get a signal and the market's going to fade against you a little bit first before it goes higher. How many times have you taken a trade, gotten in, put your stop like that, only to have the market fade against you a few ticks, stop you out, and then go up to your profit target, right? Did I hit a nerve? If you're like me, it's probably more times than you care to admit. So this is where this whole trade manager tool comes in so handy. No, watch what happens here. So here's my signal. Most of you are going to jam your stops in really tight. Pay attention to my risk amount. It's $300. Now, that is the risk. That's 2% of my account. That may not be 2% of your account. You might be more, you might be less. But watch what happens here. This is what I want to demonstrate. So what if I choose to put my stop down here? Oh, look, the risk amount is still the same. It's still $300. What if I choose to put my stop way down here? Oh, the risk amount is still about the same. It's still about $300. But what has changed? The quantity has changed. The number of contracts I'm trading has changed. Way down here, I'm only trading a single contract. Here, about halfway, I'm trading 3 contracts. And here, really, really, really tight, I'm trading 5 contracts. But my risk, I'm never risking more than I can afford to lose. Very, very important concept. So what I'm saying is when you get a high probability signal and you correctly capitalize yourself, you can earn a little bit more. That's how you earn more. You don't earn more by saying, oh, well, I'm going to take this signal and then I'm going to take this signal and then I'm going to take this signal and then I'm going to take this signal. Now, it just so happened that all those signals worked out, but let's do it the opposite way here. You know, I'm going to take this signal. Okay, it worked. I'm going to take this signal. Oh, I'm going to take this signal. See, some of these aren't getting really far enough, and you end up flip-flopping back and forth. So we wait for our high probability signals. First micro-macro cross was one of them. Macro pullback right here. Here's another high probability signal, and that one, see, we could have got in there and just hit our profit objective there also. So those are the kinds of things that we're looking for, not just on the Hawk, but on the Falcon, the Eagle, and the Raptor. So I hope that makes sense. Good morning, Jim. Jim's shooting us some advanced decline numbers today. We got a little over 900 on the buy and 1800 on the sell. So that's actually kind of bearish, even though you wouldn't know it from the market. Market keeps pressing higher. Liv asks, have you backtested taking all the signals in the first 2 hours? Not recently. When we developed the DTS system, it was rigorously tested for 9 months. I know 9 months because it was just like giving birth. And we tested signal after signal and scenario after scenario, and that's why we have settled on showing you what we consider to be the highest probability signals. Liv is asking about the first micro macro cross here on the hawk. The entry is the first green bar. No, it's the first signal. The first green bar would be right about there. This would be the first green bar where everything is in sync. And it did work out, but the signal printed just a few bars later. There's a lot of parameters that have to be met, most of them that are going on behind the scenes. I've mentioned this before, that each signal has a lot more going on behind the scenes to generate the signals than what you see on the chart. When we first developed this, Stephanie was still working with Indicator Warehouse, and she was deathly afraid that people would be able to reproduce what they see here. And I said, it's impossible. It's impossible. Even if you approximate what these moving average lines are, there is no way that you can include everything that happens that's going on behind the scenes here. She just happened to know some of the programming, so she thought it could be duplicated, but really it can't. It's impossible. So that's why we trust the signals. That's why we look to the signal. Here is the late filter entry signal on the Falcon. Late filter entry signal, fairly easy to identify. The trend line never ever goes out of sync. The filter does go out of sync and comes back into sync. We produce a signal. That's one of our high probability signals. And let's say we covered it there, and you can see we just hit our high probability profit target. These lines that you see here on the Falcon Swing Trader, this is another one of these system add-ons. This is the support and resistance suite. And this will work on any chart. It will work on a time-based chart. It will work on a tick chart, a stock chart, a forex chart, whatever you want. These lines are not pivot points. They are not Fibonacci retracements. If they happen to coincide with one, it's more by coincidence. And they forecast where the market is most likely to find support and resistance levels on the next day. Liv is asking, so the mean Renko is really a range bar with wicks? Well, yes and no. It's a range style bar. It's not, it's a range style bar because it prints irrespective of time, right? However long it takes for the bar to form, that's how long it takes for the bar to form. But it's not a range bar in the sense of a traditional range bar. If I encourage you to write Adam, if there's, if you have questions about the mean Renko bar, he will be happy to either answer them for you or get the programmer to answer them. Walter is asking, I've never traded futures. What kind of learning curve is there? Well, if you like, I can send you a little primer that I wrote a few years back about trading futures. It's the beginner's guide to trading futures. I'm just giving you my email address here. Personally, I find futures the best trading vehicle. Okay, there's my email in case anybody would like that. I don't think there's a very steep learning curve to futures. The thing that throws most people about futures is the fact or how easily you can sell futures versus stocks. It's very difficult to short the stock market. It's very easy to short the futures index of the stock market. You know, if you're trading like whatever, Google stock or Apple stock or whatever, ABC stock, it's a little bit more difficult to sell short. There's certain rules in the stock market regarding short selling and whatnot, but it's much easier to short in futures. For instance, here is gold. And you can see gold made a very nice progression. Here's the first micro macro cross signal and a failure of a red bar buy. Now this occurred about halfway through the European session. The market fell off, and about an hour before the North American Open, we had a macro pullback signal here, and another one. So this would have been around. Actually, gold opens 5:20 my time. So this was about 10 minutes into the North American session. Got a macro pullback signal, got another macro pullback signal. And you can just see it's so much easier. You can trade the market either direction. Future commissions now are very competitive, not what they used to be. And the other nice thing about futures is that it's really a global type marketplace. You can literally trade any time of the day or night. There's always going to be some futures contract which is active somewhere in the world. Gold is a very good 24-hour market, but let's say you happen to live in Europe. Well, you can easily trade the euro dollar or the British pound or Brent crude or London cocoa or London sugar. You know, the options are endless. Walter is asking, how do I know which one to purchase? Too many choices for a limited budget. Well, Adam will usually bundle things for you to, rather than purchase everything separately. There's also payment options. Some people like the idea of the Raptor because it's a one-screen system. Part of the development for the Raptor was based on some of our owners were trading off of a laptop and they just didn't have the screen real estate. Others were just more comfortable using a one-screen system. So that's how the Raptor kind of got its origins. But short of that, there's also a personality test at Indicator Warehouse, which will help you identify what type of trader you are, whether you may be more suited to the scalper or the swing trader or the eagle, if you're just looking to pick up one of the tools. And the personality test, the trader profile, was actually developed by a psychologist. So it's a honest to goodness trader assessment. And it's free. Walt's also asking, is that an Ichimoku cloud you're using? No, it kind of looks like one though, doesn't it? I knew when the programmer painted it this way that everybody would think it's an Ichimoku cloud, but it's not. We refer to this as our band, our trading band. Actually, I think on the Raptor, it actually is labeled a cloud. Yeah, it is actually labeled a cloud on the Raptor, but it's not an Ichimoku cloud. This trading band gives us our directional bias. And with the Raptor, one of our Raptor owners has actually been experimenting with a double band, and I've since incorporated the double band, just because it looks kind of cool too. But the double band gives you a couple of probable levels where the market is likely to react. So we always anticipate the market to give us some sort of reaction when it encounters the hard edge of the band. So here we are at the hard edge. Now we're starting to, become more alert to the possibility of a signal. And then once the band starts to fail and turn over, well, then we change our directional bias. So you can see here we were more bearish. Here we get more bullish and so on. All right. And there are certain, again, there's certain high probability signals that we're going to focus on, not necessarily taking every single signal. So if some of these signals, you're looking at them and you wonder, well, why did he not take that one? Well, he didn't take it because it wasn't so much a high probability signal. So here with the earlier example, where we were looking at possibly taking this signal, and I said, you know, we'd have to run a deep stop to start in case the market pulls against us, moves back into this hard edge, which is common. You can see prices did retreat against us a little bit, and then they found some support. When the market started gaining some traction here, that would be the time I would start taking my stops and rolling them in. And I would probably adopt one of the more aggressive stop strategies. These blue dots that you see right here, this is our sorry, I'm tripping over my tongue. Our stop strategies here on the Trade Manager, or this particular tool is the Trailblazer, which is the one-click version of the Trade Manager. We have 16 different stop strategies here, and all of them are fully customizable. So, you know, if you wanted to go with parabolics or super trend or whatever flavor you would like. But at this stage here, I probably would go with something more aggressive like the parabolics, or maybe the bar high low, which is a very aggressive stop strategy. And then I would start rolling my stops in case the market, you know, made a reversal. So I could at least get the trade to perhaps a break-even scenario, or maybe even capture some profit. Let me just show you how the Trailblazer works real quick. That's this part that you see right here. You're going to notice it's different than the Trade Manager. We don't have that risk component built in. So when you're trading with the Trailblazer, and this one is not specific to the Raptor, you can use this on any of the DTS birds, and likewise you can use the Trade Manager on the Raptor. I just have them on these particular charts so I can show them to you. You need to know more or less what your average position size will be. So here I've set the Trailblazer up to take one contract, and I'm going to have a 15 tick target, and then I'm going to have a second contract which will be a runner. In other words, it has no target. So I'm going to assume that for most of my positions I'm going to be able to afford 2 contracts. Now let's say I'm running a, let's see. Okay, let's say I'm going to run the Atr Stop Strategy. I'm going to make it a little bit more conservative, so my stop is up here. If I wanted to short, now we're not getting a short signal, but I'm just saying, if I wanted to sell this market, all I need to do is hit the Sell Market button. Oops, I need to enable my stop. And automatically I get my profit target. Oh, I have a break-even trigger here that's not wanting to move. There we go. So I have my profit target. I have a break-even trigger, which you can activate or turn off. And I automatically have my stop in play, all just with one click. All right, that's the appeal of the Trailblazer. Now I'm going to leave this on. In fact, I'm going to move these out of the way a little bit so that you can see how the Trade Manager actually rolls the stops. Hopefully we'll see the market retest the hard edge here, and you're going to see the system automatically take your stop and roll it according to your stop strategy. That's these blue dots. This is huge. Most traders have no idea how they want to manage their trade. That's why we gave you 16 different stop strategies. You can choose whichever one best suits the current market environment or your personality. But best of all, it frees you up to look for other opportunities. Now that I know that the trade manager is looking after this for me, I can snoop around. I can look at gold. I can look at crude. I don't have to be glued to the screen monitoring this trade. I've got my stops in. I've got my profit targets in. I've got my break even. The computer will handle everything for me. It's an exceptional tool. This was Adam's brainchild for years. He was trying to develop this tool, and finally it got made. There is nothing like this for the retail trader. We're starting to see some copycats, but they're not nearly as powerful as the trade manager or the trailblazer. The programming behind this is immense. In fact, I'll tell you, the programmer, Adam likes to share this, the fellow who programmed this, he also programs guidance systems for cruise missiles. That's his day job, if you will. So you know this programming is tight. All right, well, just waiting. Hopefully we'll see the market move at least a bar lower here so that you can see the trade manager roll that stop for you automatically. Come on, get down here for a minute. The Geiger counter was really chewing up the orders to the upside here. Whenever the dial pulls over and holds for a long time, that's usually when we're going to see a little bit of a move. So they're holding. Oh, don't know if it's going to be enough. The buyers came right back and are holding it. So I think we're going to see a little bit of a move here to the upside. Well, now you'll see how the trade manager flattens my trade when the stop gets hit. All right, well, that wasn't a signal. I was just trying to show you how it worked. But we'll look at another example so that you can see how it automatically rolls your stops for you. All right, a little bit of choppiness still going on here this morning. The market's pretty much range bound. And when a market is range bound, you're really best off waiting for it to get outside of the range before committing to a trade. Crude oil just made a quick little move higher here. Let's take a look at crude oil on the Falcon. That's kind of odd given that I believe we've got crude inventory today. In about another 15 minutes, do we? Yeah, crude inventory coming up next. So they're getting a little excited. Somebody leaked the report. So here we had a little trend change signal on crude and very nice rally higher. Here was a trend line touch signal. See, it comes down, touches trend line, comes out, produces our signal, green warning dot, triangle, hash mark. Everything is all green. That's our buy signal. Now we're producing a trend change signal to the downside, but my goodness, we're getting some wild swings going on here. Crude opened down here, didn't really do a whole lot until that move just there. So normally what I like to do for inventory is if the market has established a sideways range, I'll look to buy above and sell below. And we have this OCO function, which is right here. So I can set my order to buy above, and I can set my order to sell below. This is obviously quite the range. Let's not make that too tight. Oops. And likewise. Note how well the support and resistance lines have held the market. So here's the median line, that's the gold one. Primary resistance above, that's the blue one. Primary support below, that's the other blue one. These tend to be the three most important lines on the day. They kind of set the tone for the session. And then once we broke the primary support, we normally anticipate the market to move two zones. So there's zone 1, there's zone 2. And then it bottomed out, came back to the median line, and then rallied up to the secondary resistance and came back down to the primary support and the secondary support. I think what I'm going to do is I'm going to go with a slightly wider stop on my stop strategy here. And in a couple of minutes, I'll be able to show you how the OCO function works. Now, very often the DTS system will actually give you a signal before the report. I've seen this happen time and again in crude where, we'll produce a signal. Now we're starting to work on a late filter entry signal where we actually get the signal printing before the report is released. So just warning dots here at the moment, no complete signal just yet, but it's starting to have those parameters of a late filter entry. So you see the filter went out of sync, trend line did not. We'll see if they complete the signal with a triangle and a hash mark, in which case the signal is probably going to print somewhere down here. Okay, only a few minutes still for the crude inventory. Let's see, are we missing anything on the NQ? No, still stuck. See the yellow bars here in the hawk. See how the trend line's all twisted here on the Falcon. It's starting to look like a roller coaster. The Eagle, very evident that we're moving sideways in the Eagle, and the Raptor also very sideways. So we'll go back to this, and you know what? I'm going to throw a Geiger counter on here so we can watch the order flow. And we'll see what the order flow does when we get closer to the inventory. And all I'm doing here is putting the Geiger counter in front of my my chart. Because when you first apply it, there's actually several layers to the chart. When you first apply it, it's on the back, the very bottom layer. So if you put it here, your bars would actually be over on top of your Geiger counter. All right, the market very, very neutral. Still got a few minutes to go here. I thought we were going to get that late filter entry signal. We're working on another one. Trend line still hasn't changed color. That's the important part. The trend line needs to stay in sync. If you wanted to be a lot more aggressive, you could, it looks like we're getting a little bit of a sideways channel building through here now. You could bracket that range, have a quick little profit target in play. Because crude, of course, can make some very violent swings. Steve is asking, what's the difference between the DTS and the RTS? Well, the RTS is the Raptor trading system, the DTS, the Diversified trading system. The Raptor is a hybrid of the DTS system. It incorporates elements of the Hawk, the Falcon, and the Eagle all into one chart. But just like most hybrids, you know, it gets the job done, but not necessarily to the same degree. It's like if you think of a hybrid car, you know, a Prius is not a Corvette, and neither is a Prius a Ford pickup truck. Does that mean you can't move stuff with a Prius? Well, of course you can, but it's not going to be necessarily as efficient as using a Ford pickup truck. Does that mean a Prius won't get you from A to B? No, of course it will. Will it get you from A to B as fast as a Corvette? No, of course not. So, you know, there's pros and cons for each. The hybrid gets the job done, but the Raptor may not necessarily get every single signal that the Hawk will get. The Raptor tends to filter more. It tends to focus more on quality than quantity, if that makes sense. Like I said, part of the impetus for even developing the Raptor was we had owners who just didn't have the screen real estate. They were trading off laptops. They didn't want to get other monitors, or for whatever reason, they didn't have the space, or what they felt the space for running a multiple system. You see, I've got 4 charts on one monitor. I'm actually running 3 monitors. One monitor is for the screen sharing software, and then I've got 2 monitors set up like this with 4 charts. Okay, so we'll just hang with the crude oil market here for another minute. The inventory report should be coming out in momentarily. Okay, I've got my stop enabled. I got my stop strategy. We're going to go with the more conservative entry, but like I said, if you wanted to be more aggressive, there's a very tight little range right there. Could even enter just here above the median line, above 41.55, and short below the support line at 41.14. Our Geiger counter should start going ballistic here in a moment. You'll see the dial start to swing violently back and forth. They're starting their engines. See, still working on this late filter entry signal. We've got the warning dot. Trend line is still holding. Filter not in sync just yet. Yeah, there they go. So there was our late filter entry signal right here. Getting a lot of double dots, but prices pressing lower for the most part. So look at this huge spike in volume. And the sellers turning it on pretty good. Buyers trying to fight it back. sitting now on the secondary support level. Let's see if that holds. We would have hit our high probability target already. Could have this trade at break even. Trading friend of mine also has a different strategy for trading the crude inventory report and the natural gas report. He'll actually let the report break, and then when it looks like about a minute later after the market has simmered down a little bit, then he'll bracket the range. So what he'll be doing right now is he'll be bringing in his entry, for crying out loud, his entry order to enter above this high here, and he'll probably leave his sell order down here. Crude not nearly as volatile as before. Before crude oil prices essentially fell by half. Now it's almost a third of what they used to be. So, the DTS system did hint that the market was going to head a little bit lower here. All right, so did you see the stops here? I'm going to move the break-even trigger. Did you see how the stops engaged here and the trade manager started rolling the stops down? And like I said, there's 16 different stop strategies, so you can choose whichever one you want. Let's say you wanted to go with something like a swing high. Actually, that's a little bit far away. Give yourself a little staying power. And all these are, as I mentioned, fully adjustable. Of course, you wouldn't really want to play with this when the trade is in play. If you want to see how a stop strategy compares, let's say you want to see how the chandelier would look, well, you can turn the preview on and you get these orange hash marks. And now you can see where the chandelier would have your stops. And if that looks good to you, all you need to do is click accept, and Trade Manager automatically will employ that stop strategy. All right, so we'll put that on the shelf for now. It looks like crude oil taking their time. And the NASDAQ market still stuck in the sideways range. Walter, okay, Walter says, I sent you an email, and can you trade futures in a Roth IRA? Well, Walter, I'm here in Canada, but my understanding is yes. Here in Canada, we can do self-directed IRAs or RSPs. I don't see why it would be any different in the States. But you'd want to talk to your CPA or tax attorney or whoever you have looking after that sort of stuff for you, or your banker. They will definitely be able to tell you. Okay, well, the NASDAQ still very quiet. What is today? Oh, yes, today's Wednesday, of course. I do believe there's an FOMC announcement coming out this afternoon. That's probably why the NASDAQ is content to move sideways this morning. Walter is asking, what platform do you use? This has all been programmed to work on the NinjaTrader trading platform. People are asking, are you going to have something for Thinkorswim, TradeStation, MetaTrader, and so on? Those are all very good software charting packages. The problem is their programming is not robust enough to handle what the DTS system does, in particular, the trade manager component. Only NinjaTrader's programming is allows the software to work efficiently. Now, the good thing is NinjaTrader is actually free to use. You supply the data feed. If you choose to trade with NinjaTrader, you pay a license fee to the NinjaTrader developers. Same would be true for TradeStation or MetaTrader or any of those. If you're already an owner of one of the other systems, then I do know of a few DTS owners who actually run their charts in parallel with their other trading system, whatever it may be, TradeStation or MetaTrader or whatnot. And they'll take the signal that the DTS system is producing and then transfer that signal over onto their order platform. Well, let's see, not too much exciting going on here today. Let's pull up soybeans. Let's see what's going on in the soybean market. The grain complex has been a little bit quiet of late. And it's looking like it's still quiet. So here's the soybean market on the Falcon. And you can see the market pretty much respecting our support and resistance lines. Let's go back to yesterday's session. No, still kind of quiet. Nice thing about soybeans is when they get outside of this choppiness that you're seeing, once they pick a direction, they usually stick with it. So here was soybeans a couple of days ago, or actually Monday, yeah, a couple of days ago. The market opened, we got a trend change signal right here, and you know, they stuck with it for the rest of the day. Let's see, did they make their profit target? So there was the open right there. Covered the trade down here. Yeah, they made their target. It's one thing you're going to find about our high probability targets. Very often the market will make the high probability target and then turn around. That's why we pay so much attention to the high probability targets. This is more typical of soybeans. So the market opens, nice little trend change / late filter entry signal right here. And, you know, they settle on their direction and away they go. But not so much today. The last few days, soybeans have been pretty quiet. As is the NASDAQ today. I don't think we're going to see much out of it. Let me find out when that FOMC meeting is. those minutes are supposed to be released. So not until 12:40. That's my oh, there's Janet Yellen at 9:25. That's Pacific, so approximately 12:30 Eastern. So things are likely to remain sideways until we hear from her. Traders reluctant to commit. And then I think tomorrow is another report. Friday is the big one, I think. Is Friday not a non-farm payroll? Yes, it is. So a couple of reports this week kind of putting the nix on the trading this morning. I'm just snooping around here, folks, to see if there's anything interesting going on. But, you know, part of the challenge sometimes is just recognizing where you are in the trend, right? The trend is an ongoing cycle. It goes, you know, from trend mode to sideways channel or trading range, back to trend. And it looks as though right now we are in the sideways range mode. There's not too much we can do about it. Whenever the market is stuck in a sideways range like this, the best course of action, well, if you want to get aggressive with it, you can sell the top end of the range and try to buy the bottom end of the range. And you know, you can do that with a limit order. Let's throw a limit order in here. Now I'm goofing around here a little bit just to show you the software. I'm not necessarily suggesting that you do this type of order. But you can look to sell the top end of the trading range and buy the bottom end of the trading range. And you can see the Trailblazer gave me my break even and profit target. I'm going to nix the break even because it's not really necessary at this point. I should get a stop strategy in play. So right now my ATR stop would be down here, right? That's not very helpful because I'm over there. So what if I use a fixed tick stop? What if I go 10 ticks? Oh, let's go 15 ticks off the high. And where is that? That is up there. Okay. So now I have a stop 15 ticks off the high. I'm trying to sell the top end of the trading range. And we'll see whether or not prices respect the top end of the range here or whether they're going to continue higher. But what I was going to say to you is, sorry, I got a little sidetracked there. So once you've identified a trading range, you do have the option to sell the top end of the range, buy the bottom end of the range. But really the best course of action is to let the market get outside of this range. Let it break out, retest, and once it retests, then look for your signal. And same thing will be true to the upside. It will break, it will come down, it will retest, and then you look for your signal to buy. That's the higher probability trade. Although right now this one's working out not too badly. We've hit our first profit target. We have a runner in play. Now the DTS system has rolled the trade to break even. Well, technically break even plus one. And you can adjust these also. You can save as many ticks as you want. You can even go negative break even if you wanted. And you can also force the trade to break even manually. So I've still got the fixed tick strategy, which is up there. And I've got the force the trade to break even now on the remaining contract. Look at the isolated buying and selling. Oh, the seller's throwing it over pretty hard there for a moment. I don't know. We might be able to ride this out. Oh, no, the buyer's chewing through some of those buy orders. We're going to get tagged here in a moment. Unless the seller's really pouring on. No, it looks like the buyers are going to take control. We'll just see how they do here. And there they go. So it took them a little while. Nice thing about the Geiger counter is it does kind of give you that early warning. I suppose if I were smart, I would have just punched out of the trade with the little extra profit that the market had there for me, but oh well. Nobody's ever accused me of being smart. Just ask my wife. Let's see, what do we have anything going on here? No, gold is quiet. Crude is still quiet. Soybeans are quiet. Yeah. Well, does anyone have any questions? If not, we might close up the trading room a little bit early here today. I honestly don't think we're going to see any substantial moves until this afternoon after Ms. Yellen speaks. It's going to be a little sideways. It's probably why gold is so quiet at the moment also. No questions? All right, why don't we make it an early morning? We'll duck out a few minutes early here. Thank you very much for your attendance here today. I hope that you found it at least a little bit interesting, maybe even picked up a couple of tips. DTS owners, I will see you in the trading room again tomorrow morning. I anticipate Thursday and Friday sessions to be a lot more active than what we've been looking at the last couple of days. Okay, you guys, have yourselves a great day, and we'll talk to you later. Bye for now.